A trillion-dollar company just had its worst earnings reaction in years. A stock that ripped 15% flipped bearish, then bullish, then bearish again in 3 weeks. And the Nasdaq just did something it hasn't done in over a month. This is Panic Sell Weekly. Good evening, everyone, and welcome back to Panic Sell Weekly, where we cut through the noise so you don't have to panic sell anything. I'm Phil McCandlestick, and folks, this was one of those weeks where the headline number lies to you if you don't look underneath it. On the surface, kind of a quiet week. S&P down 0.6%. Nothing dramatic. But underneath that calm number, the Nasdaq just printed a fresh bearish flip for the first time in over a month. Semiconductors are diverging hard from the rest of tech, and 3 of the stocks we track had absolutely wild weeks. One of them dropping almost 18% on an earnings miss. So let's not waste any time. Let's get into the big picture first, then we'll go stock by stock. Let's start with the S&P 500. Down about 0.6% this week. Nothing to write home about on the surface. The bull flip from 15 bars back is still holding. Trend state still reads uptrend. And honestly, this looks like a market just catching its breath. But here's the thing I want you to notice. The point of control, the POC, is sitting at 7,379.75, and price closed at 7,411.98. That's a cushion of about $32, less than 0.5%. That is a thin buffer for an index that's been on this kind of run. Strong trend is still confirmed bull, so the longer-term structure hasn't broken. But if we get one more red week like this one, we're testing that level directly. Now here's where it gets interesting. The Nasdaq did not have a quiet week, down over 2%, and, this is the headline, a fresh bear flip just fired. Not aging in from a few weeks back, this bar, right now. Trend state has flipped from uptrend to downtrend for the first time in this entire stretch we've been tracking. And look at this. Price closed at 24,975.82. The POC is 24,942.15. That's a gap of about $34. We are talking about a market sitting on a knife's edge here. One more down week and this becomes a much cleaner, much more decisive breakdown. There is one thing worth flagging though. Bottom catch ready is actually in zone right now. K is at 57.2, right in that 50 to 60 window this system watches for. So even with a fresh bear flip on the board, there's a mechanical setup underneath that's worth keeping an eye on. Doesn't mean buy it tomorrow, means watch it. And now the divergence. While the broad Nasdaq was down over 2% and flipping bearish, semiconductors, the SOX index, were up 1.25%. Bull flip still intact at 16 bars back, still reading uptrend. That is not a small thing. When the broad tech index is breaking down, but the chips, the actual engine of this entire AI trade, are still grinding higher, that tells you something about where the actual strength in this market is hiding. It also tells you the Nasdaq's weakness this week wasn't a semiconductor story. It came from somewhere else in that index. Same story here too, by the way. Bottom catch ready is in zone on the semis as well, K at 56.5. 2 of our 3 big index reads sitting right in that window at the same time. Worth remembering that number as we go into next week. So here's the picture in one sentence. The S&P is pausing, the Nasdaq just cracked, and semiconductors are the one thing holding the whole tape up. That's not a market that's fallen apart, but it is a market that's gotten a lot more selective about where the strength actually is. Now let's talk about why the Nasdaq had the week it did, because 3 of our names had genuinely wild weeks, and one of them is a huge piece of that story. Let's start with the big one, Tesla. Now, earlier in the week, before earnings, we had Tesla sitting at $377 and change, down about 3%. And we said flat out, this is a coin flip. Earnings could break this either way. Well, it broke. Tesla closed the week down 17.5%. Let that sink in for a second. This stock blew straight through every single level we'd flagged as the ones to watch before the print. Not by a little, by a lot. The low of the week was $306, well below the $369 level that was supposed to be the line in the sand. And it's not just price. The institutional conviction reading, what we call Fund Sim, cratered to 18.8. The chip base, which tracks how many recent buyers are sitting on profits versus losses, flipped from majority profitable to almost 60% of holders now underwater. In 1 week. Here's the twist though, and this is why you don't just look at one number and panic. RSI actually dropped below 40 this week, which on this system counts as an early oversold signal. Price is also sitting way below its point of control now, which is another one of those mechanical bounce setup conditions. Does that mean buy the dip? No, absolutely not. What it means is, after a move this size, some purely mechanical readings start flashing oversold. That's normal. That happens after every crash. And it is not the same thing as the stock actually stabilizing. The chip base, fund sim, money flow, none of the stuff that actually matters for a real bottom has turned yet. If you're holding, this confirms why cutting risk before earnings was the right call. If you're tempted to buy this dip, we'd wait for real stabilization, not just an oversold bounce. Now let's talk about the stock that's given us whiplash for 3 straight weeks. Meta. Watch this sequence with me. 3 weeks ago, a nearly 15% bull flip surge. Big, clean, bullish move. 2 weeks ago, a pullback, and a fresh upthrust print, which we flagged as a warning sign worth watching for follow-through. And this week, a fresh bear flip, fired directly on this candle as the stock dropped almost 8%. That is 3 genuine flip-relevant events in 3 weeks on one chart. Now, some of the confirmation data did support this move more than it supported that bull flip 3 weeks ago. All MAs aligned actually confirmed bear this time. Money flow and volume both extended their bearish reads. So it's not nothing. But here's the honest take. Given how fast this stock has whipsawed, up big, down, warning sign, now down big again, we are treating this fresh bearish signal with the exact same skepticism we'd want you to apply to that bull flip 3 weeks ago. It could hold. It could also completely reverse again next week, the same way the last move did. If you're trading this name right now, waiting for a second week of confirmation before committing hard in either direction has been the smarter play on this specific chart lately, not jumping on whatever the freshest signal happens to be. About a month ago, AST Space Mobile had a huge recovery candle, up 19% in a single week, and we said, this looks like a shakeout, a classic scare everyone out then rip higher move. But we were very specific that it wasn't confirmed yet. We needed 2 things to happen. Money flow needed to turn positive, and that institutional conviction reading needed to stop falling. Neither one happened. Instead, both of those readings kept getting worse, week after week, even while everybody was calling it a bottom. And the stock is now sitting about 34% below where it was when we first flagged that bounce. The golden cross on the chip base, which was actually still intact a month ago, has now fully inverted into a death cross. That's about as clean a "this didn't work" signal as this system produces. This is exactly why we don't chase a single green candle after a big decline. A bounce is not a reversal until the stuff underneath the price, money flow, institutional positioning, actually turns with it. Here, it never did, and the stock kept falling anyway. So here's the week in one breath. The S&P's catching its breath. The Nasdaq just flipped bearish for real. Semiconductors are the one thing holding the tape together. Tesla had one of the roughest earnings reactions we've covered in a while. Meta cannot make up its mind, and AST Space Mobile is a textbook example of why you wait for confirmation before you believe a bounce. If you want the full breakdown on any of these, the exact numbers, the stop levels, the entry conditions we're watching, that's all up on the site, panicsellweekly.com, links in the description. Congressional Trades Trackers live too if you want to see what Washington's been buying and selling. Hit subscribe if this was useful, and I will see you next week. Until then, don't panic and don't sell just because the headline told you to. The news is noise. The chart is all that matters.